Now, it's focused on, it's a monetary system, rules-based. The rule is quantity theory of money. So 21 million units, that's where it's stopping. And we're at about 20 million units right now. So that's quantity theory. Stablecoins are based, as I mentioned before, on the dollar. And if you can find a way to use those stablecoins, which you can, in the decentralized in DeFi, decentralized financial services, you can earn money. You can earn money from your stablecoins. Just this last week, Coinbase introduced a product allowing holders of USDC who do not get the interest payments, they're not allowed to by regulation, but they're allowed to lend to loan their USDC in the DeFi ecosystem, and they can earn, as of last week, 10.4%.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Cathie Wood dives into why Bitcoin dominates, unpacks stablecoins' role, and shares bold insights. Stick around to catch every detail.
It's really only a handful so far.
Which are the other ones?
Well, of course, we've got Bitcoin. Now, in our public funds, these trades are public, so I can tell you our exposures are Bitcoin, Ether. We're finally able to get an acceptable, from a regulator's point of view, way to play Ether, and we chose Bitmine Immersion. And in the and then Solana is the third one, and we can talk about that as well in terms of its role. That one is through, well, it's Brera Sports, and everybody thinks I or ARC just bought a bunch of sports teams, which we did not. This is the company into which Soulmate is a Solana treasury is being folded and supported by the UAE, Middle Eastern, and my mentor, our advisor, and my friend Art Laffer is on the board of that one. So that's been very interesting. So those are the big three. Hyperliquid is the new kid on the block, and we're waiting to see how that all plays out. It's exciting. It reminds me of Solana in the earlier days, and Solana has proven its worth and is, there with the big boys. So those we think are, and then of course there are other services of a like money market fund and Uniswap and a few like that, Jito, which is related to the Solana ecosystem. So we will play certain derivatives, but if you're talking about the big boys or girls, those are the big three. I always take the performance of gold seriously. Typically, it is a harbinger of inflation. I don't think that's the case this time. We monitor something called the metals to gold index, so metal prices to gold prices. That has dropped below 0809 levels, and it's got me actually worried about, okay, what is going on out there? It could be related to China, and they're still going through a deflationary unwind of the property speculation there. I think what's happening with gold this time around is geopolitical risk. And you'll notice on Friday night, all of the chaos around B1 visas, right? And I think that uncertainty, it's like, oh my gosh, all of the, the foreign students, were, from India and China and their parents and everything, looking at this saying, what is going on? And personally, I think it's just a negotiation with India that's going on, and this will all be fine because we don't want to lose the best and the brightest from anywhere around the world, despite what you hear, the rhetoric you hear right now. So I think that's all going to change. But it doesn't matter. The headlines are blaring, and people are saying, okay, what do I do? And, people with a lot of wealth, so maybe older generation, are maybe, shifting some into gold. They're not probably putting it into the digital asset world.
Bitcoin just faced one of its toughest weeks yet, with spot ETFs bleeding out a staggering $903 million in net outflows. After 4 straight weeks of inflows and bullish momentum, the sudden reversal erased recent gains and signaled a sharp shift in market sentiment. Investors appear to be pulling back amid profit-taking and mounting macroeconomic pressures, leaving the crypto market shaken. It wasn't just Bitcoin feeling the pain. Ethereum spot ETFs also reported $796 million in redemptions, showing that institutional appetite for digital assets is cooling across the board. This synchronized withdrawal from both Bitcoin and Ethereum suggests institutions are stepping away from crypto altogether, at least for now, rather than simply reallocating. On the price front, Bitcoin slipped under its 100-day EMA, confirming weakness, and now hovers near $109,000. With support around $106,200, holding this level is critical. If not, the road to $100,000 becomes increasingly possible.
Bitcoin owns the cryptocurrency space when it comes to pure crypto. And now we have stablecoins, which are cryptocurrencies as well. But they are tied to the dollar because they're collateralized primarily by Treasury securities. So Bitcoin is the cryptocurrency, and we think it's going to be the biggest one by far. So Bitcoin serves 3 roles. And yes, and we would differ with
I know you
Tom.
get on very well with Tom.
And we
So,
do,
yeah.
we do, we
You buy
do.
Bitcoin.
Yes. So the 3 roles, Bitcoin, as I mentioned, is the global monetary system, rules-based, quantity rule to be sure. And that alone is a very big idea. It is also a technology. So layer 1 blockchain technology, never been hacked. The other blockchains cannot say that, right? And so that's why the monetary system is based on it. And it is the first of its kind in a new asset class. We wrote our first white paper on that in 2016. So a new asset class. So it's got 3 very important attributes to it. I do think that Ethereum is playing a very important role, and therefore Ether, the native currency, in the DeFi ecosystem. A lot of the fees are going to the layer 2s. Robinhood, for example, announced that it was going to start its own layer 2, like Coinbase has. It's called Base. They get a disproportionate amount of the fees. Now, the question is, are there going to be so many layer 2s out there that they're going to start competing against one another and confer more importance to the layer 1? That is a possibility, and that is why we're invested in Ether, and we do think it powers the DeFi world. But I think these competing interests are maybe something that Tom and I can debate a little bit.
The debate between Bitcoin and stocks in the AI era is more relevant than ever, and the stakes are enormous. Stocks have stood the test of time for centuries, surviving wars, recessions, and waves of innovation. Their future now depends on how quickly companies can adapt to AI-driven economies. Businesses in robotics, biotech, and space could thrive under AI, while laggards risk fading away. For investors, diversification through indexes like the S&P 500 may provide resilience, but the landscape is shifting fast. Bitcoin, meanwhile, offers something entirely different. Its decentralized design and fixed supply make it resistant to inflation and political control, giving it an edge in uncertain times. AI may enhance its scalability, security, and trading strategies, making it even more attractive as both a store of value and a potential global currency. 50 years from now, no one can predict with certainty which will dominate. What's clear is that AI will push both to evolve or risk irrelevance. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news, all for free. That's all for today's video. Until next time.